So I want to welcome everyone and welcome everybody on YouTube Live. It is great to be with you. My name's Tom Wheelwright. I'm the founder and CEO of WealthAbility. And tonight we are going to do a town hall on this new CARES Act. Now this was a bill, this is the largest stimulus bill ever passed by Congress or any government agency in the world. Okay, it's supposed to have been $2.2 billion. My guess is it'll go to $4 billion before it's over. There are some phenomenal provisions in here that I want to go through. We're going to take some questions. We'll take our questions, you YouTube watchers. We will be taking questions from the webinar audience. Okay, so hang in there. And we're so appreciative. Our response was literally overwhelming. And thank you so much for being here, because this is we're in a very challenging time. We're in a time where people are unsure of what's going to happen next, and they're unsure of their finances. And so this is actually the third package from Congress. The first two were much smaller. It will not be the last package. That's my personal opinion based on my experience. I would be shocked if this were the last package. Now, what I want to start with is I really want to explain some of the context behind this bill, and then we're going to get into the actual bill itself. This bill fundamentally is for two groups of people, okay? It is for employers and it's for employees. Okay, so fundamentally, this is an employment bill. This is a way to help both employers and employees in these difficult financial times. Now remember that obviously a lot of employers have been actually shut down by the government. People who you wouldn't think would be shut down, for example, surgical centers are shut down due to a lack of surgical supplies. And Manny, I'm going to push this out just a little bit, and I think we're going to get just a little bit more.
Sure, go right ahead.
I think we'll get a little bit more space here. I'm going to push this back a little bit. I think that'll give me a little more space there. Okay, and there, I actually, there we go. That's a little bit better. Okay, this is for employees and employers. Okay, there's a little bit for healthcare, there's a little bit to the states, and so know that. But fundamentally, this is for employers and employees. When you look, if you keep that in mind, understand that if you're a real estate investor, you're probably not getting helped a lot by this. You will likely be in the next package. Okay, I think the next package will be for real estate investors. Now, fundamentally, there are three ways the government has decided to help employers and employees, and even a little bit for investors, during this crisis. Okay, so obviously there is a healthcare crisis. We're all secluded at home. We're doing this from studios. We're doing this in places that we would not normally do. At the same time, there is a major financial crisis going on. And obviously they're related. The financial crisis was building anyway. Frankly, we were always going to have a financial crisis. Just know that. This triggered it. Okay, so the question was, when was it? We had no idea this is what would trigger it. We knew, those of us who've been watching this, were pretty sure something was going to trigger this. So this financial crisis, the government is doing what they can, all right, good or bad, they're doing what they can to deal with the healthcare crisis. This is to help deal with the financial crisis. And there's three ways they're doing it. Number one, they're doing it through loans. And there are 4 loans that I'm going to go through. And basically the way I'm going to do this, I'm going to go through the basic parts of this act, this bill that was signed on last Friday. Okay, so I'm going to go through the basic parts, and then we're going to open it up for questions. So it is a town hall. Want to make sure you get your questions in. All right, so there are loans. Number 2. There are grants. Okay, and we're going to go through the grants, and there are basically 4 types of grants available. Number 3. There are tax provisions that are really helpful tax provisions for a lot of people, particularly employers. Also, though, this is the one that is going to apply to some investors, and particularly the real estate. So this was basically a way to give real estate and investors a little bit, and maybe the people who fell through the cracks because they weren't big enough to get a, specifically a bailout from the government, but they're too big to get any of the grants or the loans. All right, so there is a group of employers who just absolutely are getting nothing out of this bill. This is a olive branch, if you will, to in large part to them. Okay, but there are some provisions here that are also very useful for employees, and there are some provisions here that are going to be really useful for employers or businesses that really are struggling this year. So we're going to go through those. They're really about 4 major provisions there. So we're going to go through these 12 provisions fairly quickly. All right, I'm going to encourage everybody. First of all, at the end of this, I'm going to give a text message where you can text in and sign up for a free consultation with our team, because we are here to serve you. We are here for you. We are here to provide whatever information we can, and that includes finding a CPA who understands this, who can help you with this. Whatever we can do, we're going to help. In addition, we're going to provide you with a PDF, basically a write-up, an analysis of this bill. So when if you call in for that consultation, we'll give you the write-up for this bill. So we want to make sure we help any way we can. I woke up the other day, frankly, and I just decided, you know what? I have one job over the next few weeks to several months, and that is to provide as much information and analysis as I can on the legislation, how to help people, whether it's my clients, whether it's our the people who call in, or whether it's just or whether it's the general public. So we're so happy you're here. We have well over 1,000 people participating here. And they keep coming in. So keep coming in, and we are very excited to have you on here. Now, let's start walking through these. I'm going to walk through them in this order. Okay, I'm going to start with the loans. There are 4 loans, like I said. There are 4 loans, primary loans, that are part of this package. And these loans apply to businesses, okay? They're not for individuals. There actually is a loan provision for individuals. And in a way, some of them apply to some individuals. So if you're an independent contractor, okay, you're in the gig economy, you are self-employed, all right, some of these loans do apply to you, okay? In particular, the first one. Now, the first one is the big one from the standpoint that it's not the biggest loan. It's just an easy one to apply for, and really every business with less than 500 employees should be applying for this. Every business with less than 500 employees should absolutely be applying for this loan. This is called the Payroll Protection Program. It is commonly referred to now, it's already got an acronym, as the PPP loan. Okay, now, this loan is fairly simple. The amount of the loan is 2.5 times average monthly payroll. 2.5 times your average monthly payroll. Now, what's your average monthly payroll? That's a little more detailed. So talk to your CPA, talk to your banker. A lot of you know me because of my affiliation with Robert Kiyosaki and the Rich Dad Organization. And one of the things that Robert and I, when we're on stage, and we traveled the world for the last 10 years, and when we're on stage, one of the things we're always talking about is building a team. This is a time, don't do this stuff on your own. I'm not doing it on my own. I've got my team working on this stuff. The only reason we have this available tonight is because I have a team. Okay, I could not possibly figure this stuff out myself. How to do all this technology. I can barely turn on my camera. So you have to have a team. And the two most important people on your team during this financial crisis are your banker and your CPA. Okay, your banker and your CPA. You're going to want to talk to your CPA about how to calculate this. You're going to want to talk to your banker about how to apply for it. Here's what I learned this morning. Banks can be challenging. I'm talking to one of my bankers. Now, I have a very big loan with this banker. So I'm actually a fairly significant client for this banker. However, the company that took out that loan is not the company that would be applying for this. So he says, you're at the bottom of the line. I'm going, are you kidding me? He said, nope. So you must be applying to your bank. That's my message here. Okay, 2.5 times your average monthly payroll. Well, what's the big win here? Okay, I can get a loan of $100,000, $200,000, $500,000. Here's the big win. This becomes a grant. Okay? 8 weeks. Eight weeks free. If you can't see that on YouTube, I apologize for that. Cameras are different between computer and YouTube. What this says is 8 weeks free. That means you get your payroll paid for 8 weeks by the federal government. You heard that exactly right. You get your payroll paid for 8 weeks by the federal government. That part of the loan will be forgiven. As I understand it, the rest of the loan is going to be at a really low interest rate, and you'll have a couple of years to repay it. It's not a huge loan in proportion to the size of your business, probably. However, why would you turn this down? We're all going to be paying for it, and my philosophy is we're all hurt by the virus. Even those companies who are still, chugging along, we're all hurt. For example, take my CPA firm. We're very busy. Our clients are hurting, which means that our revenues will hurt, because when their revenues hurt, our revenues hurt. So just because CPAs are really busy right now doesn't mean that we're not affected, and I'm sure that's true with your business as well. This is a loan you want to apply tomorrow. Do not wait. Okay? You want to apply tomorrow to your bank. They can send it in on Friday. Now, let me tell you why you want to apply tomorrow. Because here's what's going to happen. What you may not have heard is that some of the companies that can get this loan include McDonald's, includes Taco Bell, and all their franchisees. In fact, every franchise in the country can get this loan, because of the way they define under 500 employees for franchises and food service industry. So I did a rough calculation. McDonald's is going to get about $2 billion of this loan. Now, there's only $350 billion available. They're getting $2 billion of it. I guarantee you they're already lined up. They've already got it set up. Okay, they're going to be first in line. Okay, then you've got Taco Bell and you've got all the other franchises. Just understand that this is not something you wait on. The SBA guidelines say this will be available until June 30th. Do not believe it. They will run out of money next week. So I'm really dead serious about this. This is one you apply for right now. Okay, that's the first one. Let me give you the other three. So really the only qualification for that loan is that you have employees. That's it. And you're under 500 employees. That's it. So you're going to want to apply for that loan pretty much no matter what. All right, the second loan, there is what's always been, so number 2 would be what we call an Sba 7A loan. This is a challenging one to qualify for, and you pretty much have to pledge your house, your car, your firstborn, and everything your wife owns or your husband owns in order to get this loan. However, this loan, and there's no forgiveness on this loan, this loan is up to $10 million. Okay? That loan is up to $10 million. Next, we have what's called the Sba Express Loan. The Express Loan, you do not have to personally guarantee, you do not have to give up your house, and you don't have to give up your life for the next 10 years in order to do that. So instead, in the Sba Express Loan, this is a better loan, a little more difficult to qualify for, and it's up to $1 million. Okay, it's up to $1 million is the amount of the loan. So that's actually a really good loan for some small businesses. We have clients applying for that loan. There is a fourth loan, that I think is a really important loan for those of you who are particularly hurt by this crisis. It is called the EIDL loan, and that's an emergency industry disaster loan, something like that. Okay, I can never remember what acronyms stand for. The EIDL loan, this is up to $2 million. This one you do have to qualify for. So you have to be seriously damaged. Okay, you either have to have been shut down by the government, or you have to show that your receipts for a quarter are less than 50% of what they were a year ago, same calendar quarter. So this is for seriously distressed companies. However, here's the huge benefit. Remember under your PPP loan, you got 8 weeks. Your payroll is forgiven through 12/31/20 on this loan. Through 12/31/20, your payroll is forgiven, and you can use it for a lot of things you can't use that PPP loan for. So this is a really important loan for those of you who are seriously distressed. You have to be seriously distressed to qualify for this loan. You don't have to be seriously distressed to qualify for any of the other loans. Now, some of you may have heard that there is a $10,000 emergency loan or grant. That is part of this loan, okay? That's part of this loan. It's $10,000, and they're supposed to send it to you within 3 days. I can't believe they're going to be able to do that, but it'll get to you quickly, okay? And this is actually part of this loan, but it goes into our next topic, which is grants, because it is actually a grant. You don't have to repay this. Now, if you get this and you get the PPP, which you can, if you get this and the PPP, then what happens is that you get $10,000 less forgiven of your PPP. So you're not going to get to double dip, but you can get an extra $10,000 that you wouldn't have gotten through the PPP. And you can apply just for this. You don't have to apply for the whole EIDL loan. You can apply just for the $10,000. So that's actually a really big one. That's like kind of the first one I'm going to talk about here, because we just brought it up. And that's when we talk about grants. Now, I use the term grant because that's really what all of these are. A grant is simply a gift from the government. That's all it is. It's a grant. All right, you can call it whatever you want, but it's a grant. Some people call it welfare. Some people call it entitlement. It's a grant. So number one I'm going to put up here is the EIDL $10,000. Okay. The second one I'm going to put up here, we've already talked about. It is the PPP 8 weeks of payroll. Okay, so I've talked about those, but those are grants. That's money you don't have to repay. It's money you put in your pocket. By the way, no tax. The PPP's forgiven, no tax. It's not taxable. Okay? In fact, none of these grants are taxable. So that's a big deal because taxes play such a big part in our life. Okay, number 3. The next two, you've probably heard a lot about. You've probably not thought of them as grants. That's exactly what they are. The first one is the extra $600 per week unemployment. So the way this works is if you're unemployed, and by the way, for the first time in history, at least as long as my history, okay, which is really a long time, for the first time in history, independent contractors qualify for unemployment. So you can get the PPP or you could get unemployment. Now, this $600 a week is a plus whatever you would normally get. So take Arizona, okay? I'm here in Phoenix, Arizona, and our unemployment is not very good. It's $250 a week. However, now it's $850 a week. It's $250 plus $600, which means it's $3,400 a month, which is survivable, okay? It's not all the money in the world, but it's survivable. California, if I remember the numbers right, is $4,200 a month, roughly. Okay, so these are. I actually talked to my son, who's a bartender. He's out of work. I said, you really need to apply for unemployment. $4,200 a month. His girlfriend, $4,200 a month. $8,400 between them. They can survive on that. Okay, and that's for 4 months. So that's some serious dollars. If you are unemployed, you really need to apply for unemployment right away. All right, now there's a fourth one, and I'm going to put this on a completely separate page because this one has a few more rules to it. And this is the one that's been talked about the most when it comes to the media. And this is the $1,200 per taxpayer tax credit. You've probably heard of it as these are the checks the government's sending out. The way it's written is actually very nicely done. It's a tax credit, which means it's not taxable. Okay, since federal income taxes aren't deductible, a tax credit is not taxable. All right, and you're going to actually have some reporting requirements in 2020. It's actually a 2020 tax credit that they're going to pre-fund for you. Now, here's the way it works. There are requirements. Your income on your tax return, if you were single, must be less than or equal to $75,000. If you're head of household, which means you're single with a child living at home, that's head of household, must be less than or equal to $112,500. And if you're married filing joint, the number is $150,000. Okay? Now, there is a little trick here that you need to be aware of. And that is that this is your income on your 2019 return. However, if you haven't filed yet, it's the income showing on your 2018 return. What does that mean? So let's analyze this for a second, because that's what this is about, is analysis, not just summary. Okay? It means that if your income was lower, below these limits in 2018, and it's too high in 2019, you don't want to file your tax return yet. On the other hand, if it dropped from 18 to 19, And it could have dropped, by the way, because you made a real estate investment and you had bonus depreciation, and therefore your income was below the $150,000 or $75,000, right? So if it was in 2000, if it was low enough in 2019 but too high in 2018, you need to file your tax return, and you need to file it tomorrow. Okay, so you need to get on the horn with your tax preparer, your CPA, your tax advisor. You need to have them prepare that 2019 return as soon as they possibly can. Our network, we have 35 member firms in our network around the country, and our network, they've all told me they've had to completely rearrange priorities for their clients because clients are looking for their 2019 tax return in a lot of cases because they didn't make that big real estate investment. They didn't do things in 2018. Their income was too high. 2019, they brought it down. Now they need that tax return because they're going to be sending out those checks anytime now, sometime within the next couple of weeks. So you know that you've got to get that 2019 return in if it's low enough to qualify for this. Now there's one other part of this. So it's $1,200 per taxpayer. That's adult taxpayer, right? So consider if you have children that are taxpayers and they're adults, they get this, okay, if they file their own return and you didn't claim them as a dependent. So let's say though you've got children that are under the age of 17. In that case, you get another $500 per child. This is, as I understand it, okay, and remember, we're just in this a week now. As I understand it, it appears that this $500 is on top of the regular child tax credit that goes up to $2,000, right? So this is money that's going to be sent out to you. So if you have 2 kids at home, they're under 17, not only will you get the $1,200 each, so $2,400, you'll get another $1,000 or a total of $3,400. Okay, that's how this one works. So this is a big deal, and there are things you have to do. So make sure that you talk to your tax advisor, your CPA, your tax preparer. Make sure that you've got this straightened out. You want to take notes, make sure you do this tomorrow, okay? Now, that's the grants. Let's talk about the tax benefits because they're pretty serious as well. Some of them require some pretty strict qualifications and others are just available to everybody. So let's start with what I think is going to apply to the most people, which is the IRA 401k relief. Here's what happens. If you can show, now you do have to show this, okay? You need to be able to say that you're seriously hurt by economically, okay? I don't know how you're going to say that, but really you're just going to tell your administrator that you are. I don't know what kind of reporting there's going to be or if there's going to be reporting. I just know that that's the rule, all right? I don't know how they're going to apply it. Here's what happens. Your IRA, you can take out $100,000 and no penalty and you have 3 years to pay the tax. In other words, you're going to pay tax. If you took out $90,000, you'd pay tax on $30,000 in 2020, $30,000 in 2021, and $30,000 in 2022, unless you repaid it. And if you repaid it, you don't pay tax at all. So let's say you consider this a loan to yourself from your IRA, a loan from your IRA, you can repay it in 2 years and pay no tax. So it's a pretty sweet deal. On the 401k, most people that have a 401k recognize that you can borrow $50,000, right? However, now you can borrow $100,000. And there are no qualifications. This is a loan, so it's non-taxable. Now, let's say that you have a loan outstanding and you lose your job. Well, that becomes a distribution. And now you're subject to this rule. Because this is not just for IRAs, this is any qualified plan distribution. So it applies to 403Bs, it applies to 457 plans, it applies to self-employed pension plans, SEPs, it applies to pension plans, it applies to all qualified plans, okay, basically. So you can do this if you can say, basically you can say with a straight face that you've been damaged, have significant damage. This is a hardship loan. This is a hardship, is what this is. It comes under the hardship provisions of qualified plans. So I think this is a really big one. I think that people should pay attention to this. It may be an opportunity if you've wanted to get some money out of your IRA. Maybe you want to invest in real estate down the road because we are going to have some huge bargains later this year. If you wanted to do something else and you can show that yes, you qualify for this or you qualify for this, I highly recommend sitting down with your CPA, coming up with a plan of action, a strategy, and seeing if this might, make sense for you. Okay. Number two, let me go to number two here. And this is actually a really big deal for a lot of companies. And that is what we call the net operating loss carryback, NOL carryback. So here's what an NOL is for those of you who aren't familiar with them. Let's say that you have a really bad year. Oh, I don't know, like 2020, right? You have a really bad year and you have a loss. Well, under the 2017 tax law, you could no longer, we used to be able to carry those back and get a refund from prior years, okay? And apply it and reduce our income in prior years. Starting in 2018, we can't do that anymore. However, now we can, and here's the rule. It's very generous. For years 2018, 19, and 20. We can carry it back 5 years. So let's say you had a loss, and it could have been from bonus depreciation on real estate. But let's say you had a loss in 2019, okay, and you just filed your tax return, or maybe you haven't filed it yet. Maybe you need to get with your tax preparer or your CPA and get this filed. You can carry that back 5 years. Okay, so basically in 2018, same thing. You could have had a loss in 2018 because of depreciation, and you might be able to carry this back 5 years, right? So this is actually a really big number for a lot of people, particularly real estate investors and certain business owners. It of course is going to apply to 2020 for the businesses that have just lost a lot of money. Right? Now remember, PPP and the EIDL forgiveness, payroll forgiveness, they're not taxable. So therefore, if they don't even enter into this, you could show a net operating loss even though you got those grants. All right, so this is why it's important to analyze these and not just look at the summaries. Okay, I have a new routine. My wife, who's also a CPA, we get up in the morning, and we typically get up between 4 and 5 in the morning, and we read the CARES Act. And this is what we've been doing every day for the last 2 weeks, because it started in the Senate a couple of weeks ago, and now we've got the final bill. So do rely on your advisors for this, okay? Don't be relying on an app on your phone or doing your own tax return on the computer, right? Don't be doing that. This is the time when you actually need an advisor. Okay, net operating loss, that's a really big deal. Let's go over a couple of the others. Now, one that is actually a really big deal, particularly if you're a business owner and you leased a property in the last couple of years, or if you're a commercial real estate investor. There was a glitch in the 2017 tax law. And what that glitch said was that qualified improvement property, which is basically leasehold improvements, okay, and some other things, restaurants, etc. But qualified improvement property was originally, before 2018, you got to deduct it over 15 years. So about 7 to 10% a year. They had a glitch and they made a mistake in the 2017 Act and it became 36 years, so only 2.5% a year. They fixed this in this bill, retroactive to January 1st, 2018. So what does that mean? That means if you did tenant improvements, okay, because you were a tenant and you had to pay for those, okay, because they were beyond what the landlord allowed, or you were a commercial real estate investor and you had big tenant improvements that you paid for, all right, and you may have capitalized. In other words, you may have not deducted. You may not have taken bonus depreciation. You get bonus depreciation because you're now under 20 years. So I realize that a lot of you, this doesn't apply to. For those of you it does apply to, it's a big deal. Now, let me talk about just a couple of things that are not a big deal, but the press has made a big deal out of. Okay? The first is what we call the interest deduction limitation. Certain businesses were limited on how much interest they could deduct, and the amount they were limited to was 30% of their taxable income. 30% of their income. That has increased to 50% for 2019 and 2020. So for some businesses, my clients didn't have to deal with this, except one had a really small amount. But there are some businesses that's a big deal too, so it's going to help them out. The other one is the loss limitation. And this was made a big deal of by the New York Times, and it's not a big deal. Okay. All this says is that if you have losses from your business in excess of the income from your business, which includes your wages, in more than $500,000 beyond, you can't use it to offset. You can only use it to offset $500,000 of interest, dividends, and capital gains. So that was also changed. Okay, that was basically repealed during this time period. So that's another one that would be a benefit. Let me tell you the really big one though. There is one big one that applies to every investor and every business owner. And that is estimated payments. Estimated payments, typically, what this means is if you're an employee, you pay your tax during the year through withholding. But if you're an employer, or if you're either an employer, you have a business, or you're an investor, you pay them on April 15th, you pay it on June 15th, you pay it on September 15th, and you pay it on the next January 15th. The big change in this law is that this one, and this one are now due 10/15 of 2020. That's a big deal. Let me tell you why it's especially a big deal. It's especially a big deal because you're getting relief for 6 months, from basically 6 months from now. What are you going to do when you owe that money in October? So I would strongly suggest, get with a tax strategist, get with a CPA who really understands how to reduce your taxes, or always, a little shameless promotion here, my book, Tax-Free Wealth, which is on Audible, and if you can't get it from Amazon because they're delivering food to Whole Foods, you can get it on Audible or you can get it on iBooks. But get with somebody, get with an advisor and develop a strategy so you don't have such a big payment here. You have a window of opportunity. All right, you have a 6-month window of opportunity to develop both a tax strategy and a wealth strategy. Because remember, America and the rest of the world is going on sale later this year. So you want to be prepared for that. How are you going to do that? Well, you really need a plan of action. So that's why we're giving this offer to go ahead and call our office for a free consultation. And I'm going to give you a very special offer. I'm going to tell you right now, because so you don't have to wait. Anybody who calls us and starts working with one of our members in developing a wealth and tax strategy during the month of April, if you start during the month of April, okay, you actually call us, You sign up, you start during the month of April, which is when you should start because you've got an October 15th deadline here. We're going to do your first tax return. Okay, we're going to do your personal tax return for free, either this year if you haven't done it yet or next year. So that's a very special offer. We're only doing that in April. It's not going to increase your cost at all. It's free. We want to make sure that you're taken care of, and we want to encourage you to do this wealth and tax strategy. I'll talk a little bit more about it at the end. With that, I've gone actually a little longer than I expected, but boy, there is a lot in this bill. So I'm going to ask for some questions, Manny. Can you just, I know you've been looking at these questions. Go ahead and let's take some questions.
The first question that we have, Tom, is when you were quoting some of the numbers, the main question is, are those gross numbers or are they net? For example, the $150,000 worth of income.
That's net. Okay, that's your taxable income. So that's net. That's net. Okay, it's after deductions. Okay, so that's a very important point. So thank you for asking that question. Yes, that is not gross income. That's net income. Some numbers are gross, sometimes are net, sometimes it's adjusted gross income. Okay, so again, these are details that you really want to sit down with your tax advisor and your CPA and go through all of these details because you know how it applies to you may be different than how it applies to somebody else. That's one of the lessons out of reading this bill over and over again. Who's next, Manny?
Sure, we're going to have a live question. This question comes from Trevor. Hi, Trevor. Trevor? Trevor? Okay, maybe we'll go back to him later. Tracy has a question. Hi, Tracy H.
Tracy.
Okay, everyone's being
Okay,
shot
then.
tonight, it seems. Let's go to one of the questions that we have on the chat. The question comes from Juan, and he says, I have a C corporation with an annual revenue of $600,000, but I am a W-2 employee for another company, not for my own. Can I apply for any of the loans if I don't have payroll in my company?
Yeah, you can apply. There's actually a couple of loans you can apply for. Let me go back to those. If you don't have payroll, you're not going to apply for this one, okay? But you could apply for this one in your company. You could apply for this one in your company, or you could apply for this one, okay? So these are all loans that you could apply for in your company. On top of that, if you've lost your job with the other company, you can get unemployment. So there are some, you know, there's always it's almost like there's always an opportunity. The one industry that did not get many opportunities in this is the real estate industry. I mean, the reality is, and that's why I think we're going to have the next bill is going to protect the real estate industry, because what happens if all these people can't pay rent, like today, and they have to pay their mortgage, okay, on the buildings. A lot of those buildings are going to go into receivership. They're going to go back to the banks, and that's going to be a disaster. So I think we're going to have to see something. But for employers and employees, there's always an opportunity here. Thank you. Who's next, Manny?
Sure. We're going to try Adam next. Hi, Adam. Adam S.
Oh, hello?
Adam!
Okay, you can hear me.
Yes, we can.
Fabulous. Yeah, I'm a full-time musician, and my band is just, we're all out of work.
Yep.
And so, I mean, I did save up. I've got 6 months,
Good.
you know, cash sitting around to get me through. But, you know, if the government's going to hand out a grant, why not?
Why not?
But are they available?
Yes.
To us?
So you actually have two options. Okay? You can apply for unemployment. Like you said, an independent contractor can apply for unemployment. My son's girlfriend is in your exact same position. She's a musician. She does she does big events, and there's nothing. So she is technically now unemployed from her music business. So she can get unemployment, or you can get, you also qualify for this loan, okay? Because it's based on your salary. So basically you can get 8 weeks of salary paid by the government under this loan. So those are two things that you can, two alternatives you have, and they're alternatives. Okay, you don't get both. All right, but you can get either one of those, whichever makes the most sense for you. Typically, the PPP loan is normally better, but you have to calculate that for where you are in your income and what state you're in, of course. Thank you. Who's next?
Sure, let's try another live question. This one from Brenda. Brenda, you're self-muted. Brenda N.
Hey, Brenda.
There we go. Okay. So I had 3 questions, but 2 of them are almost the same. What about students 19 to 23 who are dependents? How much would they get, 500 or 1,200? And would it be paid to the student if they worked and filed their own tax, but as the dependent, or just to the taxpayer parents who claimed them?
Okay, so here's what I know for sure. Okay, and we don't know everything yet. What I know for sure is that, of course, you know, the parent is going to get their 1,200. If they were claimed as a dependent, okay, and they filed their own tax return, I'm not positive on that one, okay? Again, that will be in my analysis. I'll make sure I note that, and we'll make sure that's in the analysis. So when you get the analysis, we'll put that in there. I'll do a little research on that. I am not absolutely certain. I did not see in the bill where it says what happens to children over the age of 17 that are also dependents. Okay, now, if you haven't filed 2019 yet, I would suggest don't claim them as a dependent, have them file their own tax return and have them do it right now. Then we know they're going to get the 1,200. What we also know is you're not going to get the 500 for them. So you have nothing to lose if they apply, if they file their tax return. They are filing their own tax return, and if you don't claim them, you're absolutely certain that they're going to get their 1,200 as well as you get your 1,200. I will put in the analysis what happens if you're kind of in between here. You've already filed your 2019 tax return. However, you claim them as a dependent. I will make sure that's in that analysis. Okay? I'll add that. Thank you. Who's next, Manny? There's always, by the way, whenever I do these, there's always a Stump Tom question, and so that's the one tonight. So thank you for that. So I don't know everything. I have to read the stuff. I have to look it up, and I'm just happy to do that.
Sure. Next up, we're gonna try Chris Boiter. Hey, Chris, yourself muted.
Hello.
Hi.
Chris.
How you doing?
Good. How are you?
Does the PPP program also help out my guys that I pay via 1099?
Yes. So there's a catch. Okay, it does. They are not your employees, so you don't get to claim them in your PPP application. They get to claim themselves. However, you get to apply on Friday. They don't get to apply for another week. So the question is there going to be money set aside for them? Is there money going to be available? I don't know. All right. I don't know why they did it that way, but they are protecting the employers first and then the independent contractors second. All right. Just know that. But they do qualify. Absolutely, they qualify. Thanks for bringing that up, because your questions basically clarify what everybody else is thinking. So that's why the questions are so important. Manny, we have time for a few more questions. Let's keep going.
Sure. We have a question for you, Han, and he says, if you own a lot of rental properties and the renters already told you that they will not be able to pay rent, and they are the realtors, meaning you, Han, and 1099 income, how can they use the CARE Act?
So really, your best bet, 2 things. First of all, look at the tax provisions. See if you've got a net operating loss from a prior year, 2018-19, carry it back. Get a refund from the IRS. That's the first thing you want to do, okay? Second thing you want to do, and by the way, if let's say you bought a property in 2019, but you did not take bonus depreciation, go back, take bonus depreciation, create a net operating loss, and carry the net operating loss back 5 years. So that's a really big deal. So don't ignore that planning opportunity. So tax is probably the biggest one for real estate. Otherwise, you're not going to get this loan unless you have employees. If you manage your own properties, you may have employees. However, you very well may qualify for any of these loans. So definitely the SBA 7A loan, it's onerous, okay? The SBA is a difficult partner to have, and basically they make you pledge all of your available collateral. Now that may not include your real estate properties because they may be fully collateralized already and they may not be available. But they do require a lot of collateral and a personal guarantee. The Sba Express Loan, that one doesn't require a personal guarantee and does not require your personal collateral. Okay, they'll collateralize other things, but that's basically a bank loan. Okay, this is a true SBA loan. This is a bank loan that has some SBA provisions in it, and the SBA basically guarantees 50% of this loan. So you really have to have a good relationship with your bank to get this loan. This loan, you know, really, I think it's just this month that people have really stopped paying rent, from what I've heard. So you may very well qualify for this loan because if you've got really, you know, you've got like 40-50% of people not paying rents, chances are you're going to be more than 50% below revenue this year from a year ago, gross revenue. Okay, this one is gross revenue, not net revenue. Okay, this one's gross. So if you for the quarter, okay, April, May, June, okay, are going to be less than 50% than last year, okay, then you can get this loan. So I would apply for this loan. I would apply for this loan right away. Now, we don't have a Friday deadline like we do for the PPP, but I would apply for this loan as soon as possible. And then you should talk to your banker or an SBA loan consultant, okay? And by the way, I'm going to give you a special opportunity. One of the great benefits of having a network of CPA firms is that we get a lot of contacts with a lot of important, you know, helpful people. One of the contacts we have is a very big SBA loan consultant, okay? And they told me that that we can give away their contact information, which if you call us for a consultation, and yes, I want you to call for a consultation. And by the way, the reason I want you to call for a consultation is because we have a window of opportunity. You have a window of opportunity right now. You want to get ready for the United States going on sale, real estate, stocks, other investments, oil and gas, already on sale, okay? And you want to reduce your taxes. So I do want you to call. So that's why I'm holding these for people to call. But what our team will do, they already have this information. When you call, they will give you the name and the contact information of this consultant. When you set up that appointment, we'll give you the name and the contact information for that consultant. So that would be a terrific opportunity. If you have a really good bank, if you have a banker that you have a good relationship with, you don't need to worry about that. Just go talk to your banker. But I would absolutely be looking at these loans because I think you're going to need them. And we don't know what's going to happen with the next package. Now, my friends I have friends and clients who are very well versed in multifamily housing. And they tell me that none of them will do the loan forbearance because it's a very onerous program. So, you know, where you can get a loan forbearance in exchange for not evicting. They are telling me they're not going to do that. And the reason they're not going to do it is because it's not a fair trade. Okay? They're going to put up capital. You know, it's something you can do if you're desperate, but frankly, I would rather do one of these. Okay? Now, remember, you could very well, if you paid yourself a salary, let's say you have a management company and you paid yourself a salary, you would qualify for the PPP for your salary. So don't forget that either. Okay. Manny, let's take one or two more questions here.
Sure, next question is from Robert, and he says, are you saying that an LLC sub S corporation can apply for both PPP and EIDL loans simultaneously?
Absolutely. In fact, our the loan consultant that I'm using, okay, they actually suggested that you apply for both simultaneously. The PPP will come first, but while the PPP comes, okay, you can apply for while they're working on the PPP. You can work on the EIDL. Now, you can't get them both, okay, but you can apply for them both. So I would apply for them both. So if it looks like you're going to get the EIDL, and that because that's a better loan, okay, that's a much better loan than the PPP. It's a much bigger loan, and the forgiveness is much bigger. So no, you can't get both loans, but you can apply for both loans. So I would apply for both loans, and I would talk to your banker and your consultant and say, okay, what are all the details I need to do here? All right, I'm fully going to tell you, I am not the expert on SBA loans. That is, I'm the tax guy, right? I'm the tax expert. I've had to learn this, and I've talked to consultants every day this week so that I can get a handle on the basics. Sorry, none of the tax stuff. I know that of these loans. I am a huge believer in using a team. So tomorrow you get on the phone and you start developing your team. If you don't have one, call us. We will help you get your team together. Okay, we will help you get your team together. Okay, so with that, Manny, I'm gonna actually put this information up, and then I may take one more question. Okay, fair? So here is, I'm gonna give you two pieces of information here. For the free analysis, and to get in and get some team members, okay, all you need to do is text CARES, CARES, to 480-470-4180. 480-470-4180. Okay, don't be taking a picture of your phone right now, just text. Okay, just text this, just text CARES to here, and you'll get in line, you'll get on schedule, you'll be able to schedule a call, and we'll be able to get you those resources. We want to serve you any way we can. All right, it's up on the screen for those of you who are on the webinar. I put it up here for those of you on YouTube, and thank you on YouTube for participating here. By the way, we have recorded this, so this will be available in a replay. So tell your friends about it. Tell everybody else about it. We weren't able to pick everybody up. We did have we had over 1,200 people between YouTube and our webinar, and we had almost 3,000 people sign up for it. And unfortunately, we couldn't handle that much volume. So we're going to replay it. Okay, so let them know we're going to get this information out to everybody. We're going to replay this. We're going to do this again. Again, CARES to 480-470-4180. Here's another resource, WealthAbility.com. That is our website. That is our website, and you can go on our website and you can schedule directly, okay? You can go on our website and you can schedule directly, all right? So if you schedule directly, we're still gonna get you the information, okay? So you can either text or you can go to WealthAbility.com. Either one, whichever is easiest for you, go ahead and do that now. And with that, Manny, do we have a little more time here? Or how long are we going here?
We should be going until 7:30.
Oh, that is awesome. I'm used, just so you know, I'm used to a 1 hour webinar because we do 1 hour webinars for our clients twice a month. Okay, that's part of our service to our clients. And I totally forgot that we have another half an hour. This is a huge bonus, guys. So we have a half an hour to go. I'm so excited. So I was worried that we only had 15 minutes of questions. We have a whole nother half an hour. So stay tuned and ask your questions. Now, Manny, is there a way for people who are on YouTube to send you questions?
I don't have access to those. However, I did see one. unfortunately, I'm managing this one here, but Lisa over there says, if you don't have employees and a sole proprietorship, can you still apply? And you're a sole proprietorship?
And the answer is yes. Okay? If you don't have a if you don't have a if you don't have employees, if you're your own, basically you're a sole proprietor, you do qualify for the PPP loan. Okay? By the way, you also qualify for unemployment. So that's kind of your option. Okay? All right, Manny, who's next?
I have another one from YouTube coming up. This question comes from Mike Call ID. I'm a commercial real estate investor, and my source of income is cash distributions off of my investments. Since all cash distributions on the properties have been suspended, what are my options?
Again, let's go back. This is what really is, this is why I started it this way. And granted, not everybody's there right at the beginning. The CARES bill was a bill, a bailout bill or a stimulus bill for employers and employees. It really was not a stimulus bill for real estate. So I believe we're going to get a real estate bill, but we don't know yet. So here's what you can do. First, if you have a management company, so with our clients, a lot of times we'll set up a management company to manage the real estate. They will take then a salary. Well, that management company would have employees, and therefore they would qualify for the PPP loan. Or you might very well qualify for one of these loans. Okay, so you'd be looking for a loan here, or you'd be looking for tax benefits. My biggest suggestion for those of you in real estate is to sit down with a tax advisor who specializes in real estate and go through your options from a tax standpoint. Because I think the tax, the net operating loss, I think the tax opportunities are much bigger for real estate than even the loan opportunities. I think they're much bigger. So you can potentially qualify for EIDL. You can potentially qualify for these two loans. Okay, so sit down with your banker, with your CPA, come up with a strategy, a plan of action for what might work best for you. All right, who's next?
One more from YouTube. This is an interesting one. If I bank with 3 different banks, which one should I go for in order to do the PPP? The one that holds the business account for the businesses that I'll be doing this for, or any of the other 2?
I would do the first one. Okay, I was on. I had an interesting call with one of my bankers this morning. So I own commercial property. Okay, besides businesses, and I called the banker that has the loan on the commercial property. Well, he said, you're like 5th down the line of our hierarchy of people we would do loans for. I said, why is that? I have this huge loan with you. He said, because your business isn't a client. In other words, the business that has the employees isn't the client. The separate business with the real estate has the loan. So he said, sorry, but you're going to be last in line. So instead he said, and this was his advice, and he said all banks are doing this. I don't know if all banks are, but I know his is, and it's a fairly sizable bank. What you want to do is you want to go to your business lender, who you have your business accounts with, because your business is the client. Your business is applying for the loan. So particularly when you're looking at this loan, your business is applying for the loan. You're not personally applying for the loan. The business is applying for the loan. So you want to have that business banker be the one who does this. Now, an interesting comment that this banker, I'm loosely calling him my banker, but he's not for this purpose. So one of the things he said is that banks can still consider, both for this loan and especially for these loans, they're going to consider what other loans you have outstanding with them. And if you have a lot of loans, they may turn you down. So you want to go with your business lender. I say you want to go with the lender that A, you have a business account with, and B, you have a good relationship with. Okay, so that right there is actually a really big deal. All right, so who's next, Manny?
The next question comes from Evan. Hi, Evan.
Hello.
Evan, how are you?
Good. Thank you for taking the call.
Absolutely.
I filed a Schedule C on 2 different businesses.
Okay.
One was a fashion business, and one is for real estate management that I do. I'm wondering, one was positive, the real estate management company made money, the fashion did not make money. It ends up zeroing out. I didn't make any money. Can I still file for unemployment on one of them, if not both? I don't know.
You know what? That's a really interesting question. Actually, I think there are a couple of questions there. One, could you be unemployed? Yeah, you could be. And basically what you would do is I'd be, now they may ask for your unemployment. They don't typically ask for your tax return. So you have to prove that I'm sure at some point you have to prove, typically unemployment, you have to, prove that you were employed, or you have to prove that you're an independent contractor. I would probably take my Schedule C for the one that made money. Is probably what I would do, and see if that's enough for them. Because this is new. This is new for everybody on the unemployment side, because independent contractors typically don't get unemployment. You may also qualify, though, for the PPP loan. Now, this is a really interesting question. I've been spending like all week on this loan with clients and with consultants and with bankers. And it's not clear what all the rules are going to be. So are they going to combine your income? I don't know the answer to that. It may be that they just look at the one Schedule C, that you had income because you no longer have income. We don't know. I would talk to a banker about that. I would talk to somebody who really understands this. Either your banker, if you think they understand it, or a consultant. Now, consultants do charge, by the way. That's how they make their money. And I know that the consultants I've worked with, they charge a success fee on the back end. So you are going to give them part of this loan as a fee. For me, it's well worth it. I'm not a big believer in do-it-yourself. I think do-it-yourself, 3 most expensive words in the English language. And I think that that's a huge mistake to do-it-yourself. So I would be looking for somebody who can help me. Now, if your banker will do it for free. They're not going to charge you. So if you've got a good relationship with your banker, I'd go to your banker. Otherwise, I'd be looking for a consultant. And for me, I have a decent relationship with my primary banker, but the consultants we found were just stellar, and so we're using the consultant. They just take care of everything, and we're busy with our business. We're busy with education, so it's really an option for you to either go to your banker or consultant. If you need help running your numbers, go to your accountant. Okay, go to either your bookkeeper, your controller, if you have an in-house controller, or go to your CPA. I know my wife is a CPA. She has been spending hours with her clients calculating this number right here. Okay, she's been calculating this number. So she'll do that calculation for them. Here's what I also found. Healthcare professionals are really giving everything. In some cases, unfortunately, they're giving their life. I'm finding in our CPA community that while we're not giving our life, we're not, in every state, we're considered an essential service. And I find that most CPAs are just out there to help you. All right, that is kind of those are our values. And so, for example, with my clients, I'm not charging them for any of the time I spend on this. Now that's me and my clients. That's not even my network members. But I'm not charging for it because my wife's not charging for it. We just feel like this is an obligation for us. So if you're worried about the fee when you call your accountant, just ask them, okay, how much will this cost? Don't be afraid of asking for a price from your accountant just the way you would from your auto mechanic. So, you've got potentially some really good team members, and I would use them, your banker, your CPA, and if you need a consultant. So I would use team members to help you any way you can here. Thank you for that question. Who's next, Manny?
Sure, the next question is going to be from Jared W. Hi, Jared.
Jared,
Jared.
where are you?
Jared, say hi. Okay, we missed him. Next up, we have Jake. Jake, you're self-muted. Jake? Okay.
This is a challenge when everybody's
Jackie, are you there? Yeah.
Hi, actually, this is her husband. Can you hear me?
great. Yes, go ahead.
Yeah, hi, I've got a two-part question, and it both relates to the PPP plan or loan. One is the 2.5 times your average monthly payroll. That can go with a bunch of different components that you can use to pay those monies towards to get it written off as a grant. But none of those other things, i.e. lease or mortgage, go into the calculation. Is that correct? Number one, I'll ask that first.
Okay, so I hope you all heard what he said, because he's obviously done his research here. AMP includes a few things, okay? It includes salary. It includes health insurance. It includes 401k match. And it includes state unemployment tax. Okay, that's basically what it includes. So that calculation is based on these. Now, what you can use it for includes a few more things. What you can use it for includes rent, utilities, and mortgage interest. So if you don't have rent, you have mortgage interest instead. Okay, these are the primary things besides salary, of course. Okay, and salary does, by the way, salary is this: plus rent, plus utilities, plus mortgage interest. Okay, I think I covered them all. But yes, you can use it for these, but it's calculated with just this. What's the other question?
Okay, so this one might be a little more complicated. So as a small business owner, we took a 401k loan to use for our income while we were using all the revenues and investing in our business. Can we refile our 2019 taxes, do an amendment, and put that in there as a distribution for qualification for the PPP?
So this distribution is a 2020 distribution. Okay, so here's what you could do. Okay, it's a solo 401k. So you either can leave it as a loan. If you could roll your 401k, you could basically stop it, roll your 401k into an IRA, or if you just stop your 401k, you can distribute out of your 401k. Okay, so either you stop it, you'd probably want to roll everything else over to an IRA, self-directed IRA. Okay, and then what you do is you go ahead and distribute that money up to $100,000. Okay, so there are ways to deal with it. So, really the answer, I gave a very specific answer, but really the answer is sit down with your CPA because you're going to want to go through those details and make sure it works for you. Make sure it's the right answer for you, because I can't tell you that the right answer, I can't honestly say the right answer for you is to close down your 401k. I don't know that that's a good answer for you. All right, I'm telling you it's an answer. It's one way to do what you want to do. I'm not saying it's the best way. So I just want to be really clear here, because, when you're on a call-in show like this, it's, whether you're watching this town hall or the CNN town hall on the coronavirus, what happens is that, we're going to take a question and really do a quick answer here. That's why I really strongly suggest that you sit down with your team of professionals and walk through the details. I want to give you as much as I can here. Don't forget your professionals. And yes, I am beating that horse, okay? I am really beating that drum because I don't think there's ever been a time when we need to rely on other people like we do now. So take the time and use your contacts. I got to tell you, so I'm just for a minute, a little bit aside, I am so grateful for all the people. So a lot of you came to this town hall because we invited you. But there's a good half of you came to this town hall because somebody else invited you. Okay? That's somebody that I know. Okay? There are resources that we have because other people have provided us those resources freely. And so I found that during a time of crisis is when we need each other more than ever. So that's why I keep emphasizing, be sure to go, use the people around you. Don't think you have to do this in a vacuum because you don't. Okay, there are lots of people out there that are really, really willing to help. They want to help. They have good hearts and they want to do whatever they can for you. So, I would reach out to the professionals on your team for sure. Who's next, Manny?
Sure. The next question is from Matt P. Hey, Matt.
Hey, Matt.
Every time?
I can hear you, Matt. How you doing?
Oh, I'm a huge fan. I love your podcast.
Thank you.
Probably sold half a dozen of your books and done both of your WealthAbility, the old and the new. Anyway, my question is, I have 35 personal trainers that are independent contractors. They rent from me, and my facility is strictly for them to train. So they pay me rent. So we've obviously been shut down with the coronavirus. So my question would be, what would you recommend for myself? And then for each of those 35 people running their own businesses that are currently shut down, what would be your recommendation?
Thank you for that question. My heart goes out to you, and frankly, and to your clients because they don't get to use you either, and your trainers, and I know that's a big deal. Okay, so this is probably where I would go if I were you. Okay, EIDL, because you automatically qualify because you were shut down by the government. So you were shut down, and presumably the government said you can't be open. Okay, so you would automatically qualify. There are two ways you qualify. One is you're shut down by the government, and the other is your income went down by 50% for a quarter. If you're shut down by the government, that's actually a much more beneficial reason. You actually get more benefits than the person whose revenue goes down 50%. So this EIDL loan, I would absolutely apply for. Get the $10,000 grant right away, which you should get, and then while you're waiting for the money, you've got $10,000, to handle things for a few weeks until this comes through. So I would definitely, this is the right one. I'm pretty comfortable. This is the right one for you. Now, for your independent contractors, they have two choices. One choice is they qualify for the PPP loan. They do. They qualify in an amount up to $100,000 a year of salary, 8 weeks of salary. Okay, calculated like this. Okay, they qualify 2.5 times their average monthly income. So if they took their Schedule C, for example, or their 1099 from you, and they divided it by 12, and they multiplied that by 2.5, right? So if they had, let's do a number I can do. $72,000 divided by 12 would be 6,000, right? Times 2.5 would be $15,000, so they could get $15,000. They could also apply for unemployment as an alternative. Now, unemployment, like in California, 4 months at $4,200 is more than that $15,000. So you really have to look at, how long do you think this is going to last? How much do you think this is going to affect your business? And what do you think your prospects are, and how's life going to change even when they do relax some of the rules? So for example, I can see, my wife and I are fairly highly at risk, okay? We both have respiratory challenges, And so we're looking at self-quarantine for, frankly, up to a year. Unless they just completely find a cure or a vaccine or something like that, and it really does go away. For us, we're not looking at 2 weeks or 3 weeks or 4 weeks or a month or 2 months. Okay. Fortunately, we're set up to do this. The great thing about being, by the way, for accountants for the most part are introverts, and introverts have been preparing for this their whole life, right? So for us, it's a different situation. You're young, you go out, young people who, if your clients are young people, they're probably going to go out in 3 months. They are, because this thing, the worst will be past for the summer. They're going to go out, and now the reality is, could this come back with a vengeance in the fall, just like the flu does? Absolutely. So you have to, now's the time to do some planning, not just for the immediate. This is immediate, right? This is short-term fix. I want to be really clear. This is short-term fix. It's a little like eating a donut, right? It'll tide you over. But this is not a long-term fix. So in the long term, you first of all, you have to realize that the economy, business, social structure is not changing for a few months. It's changing forever. And those people who are going to survive and thrive are the innovators. Let me give you an example, a story that I heard, which is an absolutely fabulous story. My son, and actually my stepson, both of them independently, one lives in Oakland, my son lives in Oakland, my stepson lives in San Francisco. So San Francisco, of course, was early to shut down, and they've clearly done a great job of managing this because they have very few deaths compared to their population. Well, one of the challenges we all have, right, is toilet paper, right, rice, flour. My wife couldn't find flour, ended up begging for it from a client of hers that ran a pizza shop, and he was very generous. But this is actually a good case in point. What happened is that the grocery stores have run out of things, but the restaurants still have their suppliers. So this grocery store in San Francisco, this restaurant in San Francisco, they turned themselves into a grocery store, and they took their supplies, repackaged them, and now they're selling, and they can get it in bulk. They just have to repackage it themselves, and they're selling both. They have both a store and, of course, they have takeout. So that's an innovator. That's somebody who's adapting. Now, here's a question. Will they continue they might continue to do that forever, right? Because I think, for example, home delivery of groceries, here forever, right? A lot more people are using it. A lot more people get used to it. It's like a game changer for the grocery industry. All right. And so I would consider, what are you doing to change the way you think about your business, right? Will people go back to the gym? Absolutely. Are there a lot of people wishing they had home gym equipment right now? Yep. And are they ordering it? Absolutely. I know a company that sells bicycles, and they have never had such a good year. Because you see people are outside riding bicycles all the time. So you really have to look at, how is your business going to change in the long run. Take advantage of these. Absolutely. Take advantage of all these opportunities. They are there for you. They're there for everybody that's an employer and employee, right? Or an independent contractor. Take advantage of them. But remember, these are short-term fixes. And we have a long-term problem. Please don't believe for an instant this is a snowstorm. I've heard people refer to this is a snowstorm. We're going to be back at everything as usual in 3 months. I can't possibly believe that. Okay, it took us years to eradicate smallpox. Everybody had to get a vaccine. This is a really deathly virus. So the chances of this being fixed in a really short period of time for the entire world is pretty slim. So consider that now's the time. This is giving you a window of opportunity. You've got a window now. You've got some fixes here. You can keep going for a while, but in the meantime, don't stop thinking about how you're going to change your business. I have, for a quick example, I have one of our members was telling me that he did a video chat with his dental clients. He has about 20 dental clients. They're all shut down. So yeah, they qualify for this loan. They really, what they qualify for probably is because they had to let all the people go. They qualify for this loan. But he got them together to talk about how are we going to do business differently, because business is changing very rapidly on a day-to-day basis. We're all used to using video chat now, right? This is not a big deal. This is the kind, everybody's doing video town halls. I'm very fortunate because I built this studio that I'm in this last year. It was completed a couple of months ago. So I just happened to be, fortunate that I got this built. There are news anchors on major news networks that don't have studios, okay? And they're not able, so they have to adapt. So we're all adapting and we're getting used to new things. So I know that's a little side, but I want to be clear that now is the time to start doing some strategic work. You've got a little more time. You're not commuting. You're trying to come up with some ways to occupy yourself. Don't spend it all, watching television. So this is an opportunity to really make an impact, a long-term impact on how you do business. Let's finish up with a couple more questions, Manny.
Sure. The next question is from Michael H. Michael H., you're self-muted. If you raise your hand, please unmute yourself. Okay, well, Michael stays asleep. We have Matthew N. Matthew, there we go.
Yes, how are you? Can you
Hey, Matthew, how are you?
Huge fan for a number of years. You've
Thank
had a
you.
major impact on my business. Thank you so much for everything you do.
Thank you.
I don't think it's lost on anybody. You are in a giving mode, so we can all learn something from that. Thank you.
Thank you.
So here's my question. I have a lot of people on commission. They're going to be severely impacted, but they're not going to not make anything. What should they do? What can I do?
That's a really good question. All right. Now, would they qualify for this? Absolutely. First of all, I'd apply for this. Okay. So you don't have to show economic hardship here. You don't have to show economic hardship. So for them, I would absolutely be applying for this. Okay. They might, if that doesn't work for them, they might look at this one, this $10,000 grant. Okay. That one's available. Okay. So when you're looking at, people that, are independent contractors and, they're making maybe $60,000, $70,000 a year, for example, this can be a big help, and so can the PPP loan. So those are opportunities, and there are opportunities for you too. The other thing to look at is look at the tax benefits that are possible. I mean, you've been with us for a number of years, so you know that the tax law is a series of incentives, and we have brand new incentives. And so one of the things he probably ought to look at from a tax standpoint your independent contractors, they should be looking at this opportunity, right? If they have a 401k, if they have an IRA, they should be looking at this as a possible way. Because remember, you can treat these as loans to yourself from your IRA or your 401k. So you can have 401k, you can borrow up to $100,000. If you have an IRA, you can take $100,000 out and treat it as a loan. You can pay it back within the next 3 years, and you don't have to pay any tax. So I think this is a really big opportunity for independent contractors, especially assuming that you've done some planning and you put some money away, and it could be in a Roth IRA, a Roth 401k, doesn't matter, okay? You still have the opportunity to take it out or to use it, borrow it out, whichever way you want to look at that. So I would definitely look at those few things there. Manny, it is time to wrap up. So here's what I want to do. Thank you so much for spending all this time with us. We so appreciate it. Remember, text CARES to 480-470-4180 or go to wealthability.com and at Wealth, and just sign up for a consultation. Let us help you. Let us get you this free report analysis. Really, it's an analysis, and let us help you find your loan broker or whatever else you need. We are here to serve, and we have an entire team at WealthAbility ready to serve you. And remember, as we always talk about WealthAbility, that as you really develop your plan of action, as you really pay attention to what's available to you, you will always make way more money and pay way less taxes. Thanks, and I'll see you next time.
Thank you, Tom.